Good day, all. Ira Epstein of Linn Associates with your financial market wrap-up. And this is for the end of trading on Thursday, January 20th, 2019, even though we're getting on to 6 p.m. Central Daylight Time, which means Friday's trade is already up behind me. These are live quotes, as I'm recording at least, as to where the market's at right now. I'm late, obviously. I had some eye surgery today, and at least now I'm able to at least see some numbers in order to get in front of the studio camera for you. So what went on? Well, as you know, the energy prices exploded today with the Iranians claiming and taking responsibility for shooting down an American drone. Then we had yesterday the Federal Reserve issue a possible change of monetary policy. Now, the futures markets, especially the Fed watch page, which takes a look at the euro dollars and so on, they're pricing in 100% probability that the Fed's going to cut rates in July. I don't know. I want to see what happens at the G20, although in my mind, I cannot imagine that Presidents Trump and Xi come out of that meeting and say they found no common ground to continue negotiations on. You might think that. I don't. The problem is talk is cheap, actions are not, and if everybody goes back to the posture in the negotiation they had, probably not a lot of movement. Yields on money, did you see them today? You were down under 2% in the 10-year, so if you're thinking of buying a home and everybody's talking we're going to take the 10-year yield, and I'm hearing this over and over, 1.75 or lower, it sort of reminds me when we were up to 3.25, and they were talking we were going up to 3.75. You know, markets get extreme one way or the other. When you look at the S&P, let's give the market credit. Today's high got up to 2960. It is a new high on this move. So it's impressive. Any way you want to cut it. We're in a resistance zone, admittedly, but the market did exceptionally well, and that's if the Fed's going to change its policy. When you look at tonight, you're backing off a little, but it was a day that went in one direction, and it was all bullish. You might get some people saying this could be an inverted head and shoulder, kicking the market up even further for the year. But at some point, somebody's going to say, you know, why is the Fed cutting rates? If parts of the sector, our economy, is going to weaken, at what point does the market become overvalued? I am not saying that's the case. I'm throwing ideas out, and that's all that this is about. As a chartist, all I see right now is a pattern of higher lows, higher highs. A bull pattern. The key is not to get back under this low, which was the 2885 area. You've got the 18-day average over the 100. The 100's over the 200. That's all bullish, and it means that if the market broke hard, you got nice layers of support under it. And I see a market that has not yet been able to get up to the upper Bollinger Band. In fact, it hasn't since the end of April. So when it hits it, and if it hits it, there's two words in there, I look for that to be a level of resistance. That does not mean I'm bearish. The market's got an embedded reading. So until the red line closes back under 80, I say this market has still got buyers under it that feel they've left behind, and they'll probably be in the market that way. The same thing is true of the NASDAQ. You've had a pattern of higher lows, higher highs. The market rallied up today, got up to a high of 78.21, which was just a 1.5 points off the Bollinger top. Now, each time we've hit that Bollinger top in these markets, and you can see that, you've run into a bit of resistance. Resistance just means that's where I think the smart, quote-unquote, money is taking some money off the table, and they're coming back in on breaks until the trend changes. What else did we have? We had a crossover yesterday where the 18-day average got back over, as you can see. In fact, right here it was over it. This is where it was under it. So on Tuesday, the 18 was under the 100. On Wednesday, it got back over it, and it certainly stayed over it today. But if it keeps waffling, it's a sign there could be a problem in the market. In the Dow, the trend is still way to the upside, higher lows, higher highs. Again, we haven't hit that upper Bollinger Band. It wouldn't surprise me if you hit in the stock indices those upper bands if you follow through tomorrow and you see some profit taking going into the weekend, especially ahead of the G20. But as I said, I don't think the two presidents are going to walk out of there saying anything bad. I think it's up to how the negotiation goes. In the Russell, higher lows. You've had this consistent pattern, bullish embedded reading. The market challenged itself here at the combination of the Bollinger Band 100-day average, spent a little bit of time on Wednesday coming back in it, and today soared. But again, the market's finding some resistance at that upper Bollinger Band, and I think that's where the pros, not just this one, but this one too, I think that's where the pros are seeing some resistance. This morning, for those people that had my subscriber video, as the market had opened and was coming down, I said, now I think because you're past the Fed meeting that we're back into that play where the pros might sell the VIX down here because it's harder to go from 13 all the way down to, say, an 11 number than it is when you're up at these numbers to go higher. And that's because we're coming off such low levels. And I think they did. They just missed getting to the 18-day average, but the closest moving average in this case was the 100. My bet is that if they sold, they probably took some money off the table there. We'll see what happens. Today's low is going to be an important day because you had an outside day up. In the bonds, I don't change my opinion on you. You hit a Bollinger Band, I think the pros take some money off the table. And you had corrected, you had a nice run and you had breaks all the way through. And yes, there's people that day trade in and out of this, but that is the resistance point. And I don't like what I'm seeing. I'm seeing the slow stochastics turn down. Momentum often leads price. I wouldn't be surprised if there's money coming out of this market right here. If you drop much more, you could see that in the 10-year note as well. I see a resistance point at those numbers. That doesn't mean you're out of your uptrend, but that's where I'm seeing resistance. In TLT, I see resistance at the upper Bollinger Band. I will be surprised if traders didn't take something off the market there. That's what a Bollinger Band's for. It depends the formation they're in. If you break out of sideways action and you start climbing it, there's a term called running it, especially if you have an embedded reading. You don't have an embedded reading, and you're not running that band at this point. In the dollar index, you can see how the market fell back to the 100-day average. Now, yesterday, the market fell back, and we know what the Fed did. This was Tuesday's action. Wednesday was the Fed announcement. There's a yin-yang impact when you get a major announcement from the Fed, and that's because think of the time that they come out. What time is it in Asia when that goes on? We already know the European markets are closed, so you're waiting for Asia to get up and react to whatever the Fed does. Then the Europeans come in later because people do sleep, and then you get into what the markets are doing. So the dollar got hit as there's a potential change of policy on our monetary interest in what we're going to do and what the Fed thinks of the economy. In terms of the euro, the market's gotten a big bid because they're talking more stimulus in the European zone, the eurozone. They're talking of lowering rates, even though they're negative. They're talking of lowering rates and going back to a bond buying program. So that could kick this market up, whereas the U.S., our stimulus is going to be lowering interest rates to cushion a fall. But I don't see quantitative easing going on at this point. In the British pound, looks like Boris Johnson is going to be a shoo-in in July. They'll announce what it is, but it would take some type of real upset or last-minute news to take it away from him. There's two contenders left for the PM. He's one of them, and he's got a huge lead. The bookies, I think, have him an 89% winner there. So you've got the lower highs, lower lows, but the markets come back off of all these votes that have happened, and now you're pretty neutral. You've got price over the 18-day average with the swing line down. If you rally, look for resistance at the upper Bollinger Band, the way the market found support at the lower one. In the Japanese yen, you're up to the upper band, and this market's been pretty good with watching that. If you watch these bands, they tend to, if you will, contain the rallies. You got up to it there, then you pulled back. We'll see if this market's going to go anywhere. The question is, why is it going somewhere right now? In Bitcoin, you're still in a bull market. Higher lows, higher highs. The market's doing a nice technical job of paying attention to the resistance point of the Bollinger Band. It's overbought. I do think some pros are taking money off the table. It's a pretty rough price here at $96.40. Market was $3,000 or so in December. Look at how the spread has collapsed in the energy prices over the past few days. This was Monday. This is how the market collapsed on price from then. So the differential between WTI and Brent has come in about 75 cents. That's a lot in a short period of time. You can see how the trend is higher lows, higher highs. Now you might ask, this is Brent, so that's the oil that could be impacted by all that is going on off the Iranian coast. Resistance, as I see it, back up around the 66.80 level, the combination of the Bollinger Band and the 100-day average. The WTI is the more interesting play. It's very overbought. Higher lows, higher highs. I look for the resistance to show up immediately in front of us in these two numbers, and you ask yourself, why is WTI going up? It's not our oil that's threatened. The reason is the spread's narrowing because if anything happens there, we can export a lot of oil, so too much of a premium of Brent over us is my guess. The word is my guess. In the gasoline, lower low, higher high. I didn't think this low should have ever been taken out. The chart was so pretty without it for losing the embedded reading and making a move. I look at resistance now back in the 182 to 183.40 area. The interesting part is tomorrow's summer, so the driving season's right ahead of us, and with it at least somewhat warmer temperatures. If you're looking at the 10, 14-day forecast, it's starting. Not hot. Warmer temperatures, which means 70s, maybe the 80s zone in a lot of the country. In nat gas, that's a killer for this. This market's dropping. It's still not getting enough of that real hot weather to go anywhere. So you put it all together, interesting day to say the least. I'm surprised I'm able to see the boards as well as I am because I had that eye surgery today. In any case, if you look at what I do in the morning, I put out a morning subscriber video, and I record typically no later than 6:15 in the morning, so I have it out by 7. There are mornings like I did today where I do it a lot earlier. And the idea here is I want to give you an idea of what I'm seeing on each and every chart at that time, and I can say buy here, sell there, put a stop here, take an objective there. Here's what I see technically, here's what I see fundamentally. I charge for it. 26.5 cents a day if you haven't tried it, okay? And that's a 30-day commitment, so it's $7.95. After that, again, $15 a month, or every 30 days is the way to look at it. It doesn't go by a month, it goes by the day you sign up for it. Or you can do it on a one-year basis for $156. Not very much. 3 cents in corn. If you look at it in gold, what is it, $1.50? Not much money there. And you get this for the year. How do you get it? Go to our website, www.iraepstein.com, under the word education or research, or click right up here if you're watching me on YouTube. I'm Ira Epstein. You have a great night. I'll see you all tomorrow.